Sanjiv, hi, good morning. Good to have you on the show as always. And what a U-turn the global markets have taken, Sanjiv, especially given the breach of 21,500 yesterday, the kind of correction that played out in some of the blue chip names like Reliance, ICICI Bank, SBI, the way they were falling. One is wondering whether today we're going to choose to follow the global cues. At least going by the GIFT Nifty, it seems to be the case.
Yes, good morning, Aisha. Good morning to you, Awan and Nikunj. And Delhi at 8 degrees is giving me a lot of pleasure in the weather, but discomfort in the early morning summary. So yes, we slept well. And yesterday we had told you 21,500 is going to be retested. And lo and behold, who thought that the Nasdaq will be up 350 points and the Dow is falling, following chase? So I think the short-term bond yield price hike is already getting priced in. You have this positive of Bloomberg also including India in the bond index. And I think banks are raring to go. The results this quarter from the banks will be the trendsetter. So I am extremely positive on banks and some of the other stocks, with the autos and so on. But I think now that, we've had this consolidation stroke correction, 21,500 has been defended. And if we today cross that 21,750, which fingers crossed, I think, then we are headed to past that 22,000, whether we like it or not. And I think the frenzy will see again the left out feeling, seeing buying again, because as you start to scratch 21,700, the money on the sideline will re-enter. So yes, a healthy correction for the market, but now take it with a pinch of salt. If you use this decline to buy, then stay put because we are headed higher.
So are you betting on banks to buy on decline, Sanjiv? Is that the recommendation?
Yes, Aisha. Firstly, only you just take that if the bond index happens and you get included, State Bank will be laughing its way to the bank. FY23, 50,000 crore. This FY24, they will be coming out with 68,000 crore profit. And next year, you are talking of 80,000 crore. Price to book 1.9 times. 52 lakh crore balance sheet, 7 lakh crore housing loan. How can you go wrong? And State Bank has done actually nothing. PNB was 50 and State Bank was 600 and State Bank is 630 and PNB is 100. So if I have to put one stock in my large cap list, which is giving me extreme safety for a target of 750, it is State Bank. Secondly, look at the numbers from Maruti. 2,30,000 retail sales in the month of December, which is arguably the most weak month, given that people want to get rid of inventory. And they are saying this is the highest in the history of the company. So at 10,000 rupees, Maruti is giving a screaming buy for a target of 10,500. And last but not least, Indus Tower. In this whole Vodafone's game, which is going on for capital infusion, it is now evident that Vodafone has survived. And now with Grasim putting in money into Vodafone itself may come out with the rights. Indus Tower will be the one which is laughing its way to the bank because receivables come, ARR and IRR both will improve. And we know that tower business, they are the market leader with a 53% market share. So these three stocks are on top of my buying list.
All right, stay with us. Lots more to chat about. And Tata Motors in the spotlight as JLR has delivered strong sales in the third quarter of FY24. Although it's missed street estimates, let's understand a little bit more about the Q3 updates. We've got Shrishti here with the details. Shrishti?
Well, yes, Tata Motors JLR is in focus as the company has come out with its Q3 updates where the numbers look pretty decent, wherein the wholesales data that has seen a jump of 4% on a quarter-on-quarter basis, while the retail sales has seen a jump of 2%. The numbers are slightly below what the street was expecting in, but what's strange to note is that this time the company didn't come out with its free cash flow number that they are expecting at the end of Q3, wherein earlier we have seen companies coming out with a commentary which was a big trigger for the stock as well. Talking about the other data, that is their order book trajectory that is seen to be declining on the expected lines, with the chip shortage seen to be improving. Their order book is eventually coming down, and this time that has come down to 148,000 units from 168,000 units in Q2 FY24. Other than that, onto their order book number, the company too mentions that 76% of their order books is from the demand from the Range Rover Sport, as well as the Defender, which are some of their high margin products. So the order book trajectory still remains strong. Talking about the brokerage note as well, JP Morgan has come out with a note where they maintain their outperform rating, overweight rating, I beg your pardon, with the target price of 925 rupees. They do say that JLR wholesales is seen to be improving, the mix remains strong, but the management commentary regarding the free cash flow as well as their debt reduction will be important during results. So that's the update coming in from Tata Motors JLR division. The free cash flow number will be a key to watch in the upcoming results.
All right, thanks very much. Sanjiv, why don't we get in your thoughts then, just going by the kind of updates that we've gotten from JLR as well as their commentary. It's been strong growth, although it has missed street estimates. And JP Morgan believes that there's strong profitability across JLR and the India business.
Well, that is why the price is at 800 Avan, and that is more than doubled. And on the back that JLR is not just China. In India itself, there is a big desire for Land Rover and the new version. But I think it's all in the price. I still think Ashok Leyland is my top pick in that sector. But and I would go with Maruti, which has come out with stellar numbers. But yes, Tata Motor is something we own. We are not increasing our size over here. In fact, we are reducing some of our weightage. But like you said, if China does make a comeback, which is very strong, and which, yesterday I was reading the China Central Bank saying that they are going to use their reserve ratio very, very actively to revive credit. And that will be a blessing in disguise for, their consumption and some of the metals there. So buy on decline would be the strategy. But Tata Ashok Leyland will be the star for the next a few months in the four-wheeler space along with Maruti.
Right. Sanjiv, not that Z has been an investment stock, has been at best a trader favorite, but now, news flow indicating and purely source-based and that too on global wires, that the Sony merger is called off.
Well, like you said, Aisha, if and buts will keep going because there is a lot of, you can imagine with 3% stake, the Goenkas have held the company, banks, institutions, everyone to ransom. And it's about time you went ahead with this. 96% is owned by institutions, shareholders, mutual funds, and Sony's infusion will be the big game changer. I am still keeping my fingers crossed. And MNC, once it becomes an MNC stock, this stock can be re-rated to, whatever levels you can imagine, 450, 500. Now, in the short run, there will be volatility. You will see, constant legal arguments on both sides of the coin. And if anything, TV channels will make money on both sides. So we will wait for the exact terms to come. I still think there will be some, arrangement when you've come so far. But I'm keeping my fingers crossed that it becomes an MNC. And sooner rather than later, we see the back of the Goenkas.
Okay, fair enough. Still keeping your fingers crossed when it comes to a Z Entertainment. But that aside, let's also get in your outlook then, Sanjiv, on the entire earnings season. In terms of individual sectors, in particular, if we were to talk about IT, what exactly is it that you're penciling in, given the fact that the year gone by has been fairly muted for the IT basket as a whole?
So Avan, we know this is seasonally a weak quarter and we expect that, but we would like the guidance. No, the yields which have fallen, inflation coming lower than what was expected, and US spending back. And yesterday, actually, it was NVIDIA which hit a new high. I mean, NVIDIA is $1 trillion. So, there is going to be this constant worry about AI and what impact. But if I saw anything to do with electrical manufacturing services and the correlation of outsourcing, I think Indian IT is here to stay. Now, what the guidance will be more important than the numbers. The numbers are discounted. We continue to like HCL Tech and Wipro and would use any decline to buy, and Persistent and Coforge on the mid-cap side. But like I said, it is the guidance going forward because what they look for the year will be the key, since the US is already now pricing in a very, very soft landing or a mild recession.
Okay, point taken. Sanjiv, stay with us. Lots more Q3 updates as well have trickled in since last evening. Sharad is here with a quick update. Sharad?
Well, in focus, we are having Metropolis Healthcare inline set of numbers coming in for Q3. When you look at it, the core business revenue that has jumped 12% on a year-on-year basis, and of course, it has been aided by the volume growth. Now, interestingly, the segment of the premium wellness segment has actually done well in the third quarter itself, and the management had stated the margins did get impacted in the third quarter. This is coming in because of the operations being impacted in the situation in the Chennai and the Tamil Nadu front. But overall, it's largely in line to good set of numbers when it comes to Metropolis Healthcare. And going forward, our channel checks suggest that there would be price hikes also coming in as it will be competing against the digital players. The second stock in focus would be Bajaj Finserv, largely inline set of numbers. If you talk about the Bajaj Allianz General Insurance part, the gross direct premium that has jumped 18% on a year-on-year basis, while it's been roughly flattish when it comes to its life insurance business. But it is largely in line. The third stock in focus would be IRB Infra. Good set of numbers coming in. The toll revenue, if you look at it for the December month, that has jumped up to 26% on a year-on-year basis, and a strong numbers have been coming in because of the macro data. And as per our channel checks, it's expected that in the fourth quarter there might be a toll revision as well. So do track Metropolis Healthcare and IRB Infra on their suggestive revisions going ahead.
All right, thanks very much, Sharad, for giving us those updates. Meantime, let's get in a take then on the charts of some of the stocks that have been in the spotlight in yesterday's trade. And just going by what we started off with, Kunal, the fact that some of the laggards included the likes of heavyweights like Reliance Industries and an HDFC Bank, along with an SBI in trade yesterday. What is the chart reading?
Well, many of these stocks yesterday, in fact, managed to break below their, multi-day, multi-week support for themselves. So, for example, Reliance Industries had, a support closer to 2,580 mark on the spot levels. Yesterday, the stock made a low of 2,568, which means it's managed to break below its key support point. HDFC Bank, particularly, that stock formed a bearish head and shoulder pattern on the daily charts, even though it's a contracted pattern of just about some 50-60 points. But because of the weightage of the stock on the Nifty, as well as the impact the stock has in terms of the sentiment, even a 3%, 4% drop could probably mean a short-term knee-jerk reaction on the indices. So even that stock yesterday managed to break below the 1675 mark, which is the neckline of this of this bearish head and shoulder pattern for HDFC Bank. And I think the worry for the markets are not just these two large cap stocks underperforming, but even ICICI Bank, with the stock which has struggled over the last 2-3 weeks, particularly the stock from I think 1030 or 1050 odd levels is now sub the 1000 levels for itself. So the pattern of making consistent lower highs and lower lows for ICICI Bank is also adding salt to the injury for the markets as such in the near term trend. So we would have to wait out for a point where these stocks start to get into a reversal as well as a consistent bout of uptrend rather than this consolidative and a mixed trend for themselves.
Fair point. Bhasin साहब, good morning.
Morning, Nikunj.
कैसी ठंड है जी?
8 डिग्री है सर. बड़ा मुश्किल है सुबह सुबह ये करना, but that's part of life. It's just a मौसम. It doesn't last too long, but we take it as it comes. So I think this is the best time to be in Delhi. 8 degrees is what I'm sitting at right now.
Markets are also feeling chilly, sir. The momentum of last month has suddenly vanished.
Nikunj, that was bound to happen. I think mid caps can still undergo some more correction, and that is much needed. But large caps, on the basis of earnings, on the basis of macro, on the basis of bond inclusion, on the basis of foreign buying, will continue to be the ones. So we are, like we said, we are 65% now on large caps, and we continue to be very, very positive there. That is where the real, I think, value remains. So like I said, 21,500 has got defended twice. We should see 22,000 maybe in the next week, and we'll take it from there. Given that now a lot of consolidation in the US and overseas in India has taken place. So I still think it's the index, the large cap, which will move. Bank Nifty should be the one which should really charge things up, because their numbers will be very, very optimistic. I mean, bank earnings should be the best in this quarter.
Fair point. I want to look at this entire media space. And if one assumes, Bhasin Saab, that the Sony merger does not go through, it's an assumption. I don't have a confirmation. There is nothing on the exchanges. This is a pure global wires had reported this last evening and everybody picked it up. If the merger does not go through, what could be the immediate downside for Z as a stock?
So see, Nikunj, I think Z will find some other person or some other group which will want a stake over there. And definitely, like I said, with 3% stake, the Goenkas can't hold the company to ransom for how long. I am very sure there will be another buyer who will come there. But yes, in the short run, there will be negativity more created because of the rumor mongering which is going on. I still think, given that 2 years deadline has passed, there will be some sort of agreement where they will get this, and most suitable seems Puneet Goenka takes a bow and remains on the board and gets a certain fee for, guiding the people through. But they don't want him to be at the leadership. So we'll wait for the news. But yes, you could see a sharp downturn in the sense 25%, 20% maybe, because smart money is going to use this decline to buy, since the underlying asset is extremely viable for any other person who wants to make an India entry.
Another stock which is worth revisiting because of the block deal yesterday, Naresh, is GMR Airports. And, everybody's flying. Airports are busy. New planes are getting added. New destinations are getting added. Do you think GMR Airport, Naresh, could be one of those stocks which, according to that Naresh Mirani theory, 10 साल के consolidation के बाहर निकला? इसकी नई theory, इसको हम नई theory बोलते हैं बसीन साहब. And I love his point on, look at stocks which essentially are breaking out after 5 to 10 years of consolidation. Naresh, you should get it copyrighted. I shamelessly use it every time.
I think this is a classical style for technical analyst, so nothing to copyright as such, but something which should be copied by most people and implemented. So GMR Airports, the problem is the fact that it has already moved up 50% from the time it broke out. So I recommended the stock around those 60 levels, and then suddenly out of nowhere, we saw the deals happen and it has gone into momentum. The volumes have increased. Now, in such a case, when stocks have broken out after a long period of consolidation, the only way you can ride them is to keep a trailing stop loss at the last swing lows or at the 20-day moving average. So in this case, that stop comes a little lower, but even now, if one wants a stop loss a little closer, it will come closer to 80 levels. So yes, the stock is already up quite a bit, and the only way to ride it is to keep a trailing stop loss at current levels to buy. The risk reward may not be great.
Okay, fair enough. That's the view coming in on some of those buzzers in trade. Meantime, let's get in your thoughts then on the OMC, Sanjiv. Just owing, by the way, that we've seen the overall crude oil prices trend, and it seems like a lot of analysts are of the view that there's a valuation upside basis the consolidated earnings and the investments in some of the listed peers. How are you looking at this basket, which has already rallied?
Yes, Awan, before that, I'll just like to remind Nikunj that JP Power, when I came to your studio on 15th September, I recommended at 8.5, and I said buy it and forget it. It has hit 17.5 yesterday. JP at 11 rupees is now 24, and we know the story of Vodafone. So yes, sometimes if you have the real valuation metrics on the market cap, on the scenario, you can make multi-baggers. GMR is something which I've been chasing and recommending from 35. I still think Awan OMCs are a buy, a screaming buy, given that their, the Russian episode has played out very, very well for them. They refine both soft and hard crude, and numbers from particularly IOC, HPCL will be stunning. So we have an overweight on IOC out of all the three. HPCL, we are not chasing it because it's gone up very, very fast. But I think this is a very, very good space, which has just started. If Naresh can concur with that. I mean, years of consolidation, but 240 HPCL is suddenly 440 and 90 rupees IOC is 130. I still think there is room on the upside. And there are very good classical play of the business, which is doing extremely well.
Okay, that's OMCs for you in trade. Meantime, Naresh